Inflation, low interest rates, a loss of buying power, and the depreciation of the US dollar are just a few of the things that the cryptocurrency has been hailed as a remedy for. These benefits were easy to believe so long as cryptocurrencies continued to rise apparently independently of other assets. Previously, crypto assets were seen as a hedge against inflation, but lately they have behaved more like stocks and other risky assets. Higher interest rates are a headwind. Cryptocurrencies, like other hazardous assets, have reduced their liquidity for future crypto assets. Since the financial crisis, inflation has risen dramatically. In this video, we will be discussing what will happen to Bitcoin now that the Federal Reserve has raised interest rates. Stick around to the end since our last point is something you may not have considered. Will the Federal Reserve's action affect investment in Bitcoin? The Federal Reserve of the United States announced a 0.5% increase in interest rates, the largest increase in interest rates in the past 2 decades. In accordance with its contractionary monetary policy, the U.S. Federal Reserve is attempting to combat inflation by increasing short-term interest rates. As a consequence of the Fed's decision, it is anticipated that demand for goods and services will decline. As interest rates climb, borrowing money for new purchases will become more difficult. In this manner, consumers will be less able to spend, owing to a cash shortage. Despite the fact that the recent increase was welcomed by crypto markets, historical evidence indicates that cryptocurrencies such as Bitcoin will see long-term price increases. It seems that the decline in expenditure also leads to a decline in investment. According to statistics, the price of Bitcoin has decreased by 40% since the U.S. Federal Reserve started hiking interest rates. What is Bitcoin? Bitcoin is a decentralized digital currency meant to function as a medium of exchange and a means of payment. It eliminates the need for a third party in financial transactions, is paid to blockchain miners for the effort done to verify transactions, and may be acquired on a variety of exchanges. In 2009, an unidentified developer or group of developers using the name Satoshi Nakamoto released Bitcoin to the world. Since then, it has become the most well-known cryptocurrency worldwide. Its prominence has prompted the creation of several other cryptocurrencies. These rivals either want to replace it as a payment mechanism or use utility or security tokens on other blockchains and new financial technology. Bitcoin, unlike conventional money, is produced, circulated, exchanged, and kept on the blockchain, a decentralized ledger system. Bitcoin's history as a store of value has been tumultuous. It has had multiple boom and bust cycles over its very brief existence as the first virtual currency to attain broad adoption. Bitcoin has spawned a multitude of new cryptocurrencies. One of the reasons cryptocurrencies have failed to gain traction is because individuals are avoiding high-risk investments in reaction to the Federal Reserve's aggressive stance. The prices of cryptocurrencies seem to increasingly track the performance of equities, particularly technology companies. People are disappointed. They thought cryptocurrencies would be different. Those in the sector who consider Bitcoin as a hedge against inflation are disappointed by this development. So far, inflation has not prompted a large number of individuals to purchase additional cryptocurrencies. It is uncertain as to the extent to which the market has already factored in these rate rises. What is the Federal Reserve up to? The Federal Reserve hiked its benchmark interest rate by 0.5 percentage points, its most aggressive action as of yet in its battle against inflation at a 40-year high. In response to intensifying inflationary pressures, the rate shift is the greatest since 2000. Jerome Powell, chairman of the Federal Reserve, emphasized the committee's dedication to reducing inflation while indicating that rate hikes of 75 basis points at a time are not being actively considered. The central bank hinted it would begin lowering its $9 trillion balance sheet asset holdings. Chairman Jerome Powell said that adjustments of 75 basis points should be on the table for the next meetings, but he seemed to downplay the probability of a more aggressive posture. As measured by the BLS Bonet-Linn-Shachem Consumer Price Index, the 12-month rate of inflation increased by 8.5% in March. Since June 2006, the Federal Reserve has increased rates at consecutive sessions for the first time. In March, the Fed projected that the funds rate would increase to only 1.9% this year, but it is currently closer to 2%. On Wednesday, the benchmark 10-year Treasury yield approached 3%, a level not seen since 2018. How will this affect Bitcoin? As interest rates increase, investors abandon Bitcoin and other digital assets. Bitcoin's 30-day moving average trading volume is at its lowest level since August 2021. In May 2021, this figure was $2.57 billion, a decrease of roughly 60%. The opportunity cost of investing in non-yielding assets such as Bitcoin increases as interest rates rise. Interest in Bitcoin has remained subdued, as seen by a lack of growth in the coin users' base and a dearth of fresh demand. In the last 2 years, the growth of institutional and retail crypto enthusiasts coincided with a price explosion. In addition to a decline in consumer purchasing power, uncertainty over the Fed's response to persistently rising inflation is a contributing cause. The correlation between Bitcoin and a basket of non-profitable technology stocks has reached an all-time high of 0.60. In the previous week, Bitcoin exchange outflows reached $1.2 billion. During the previous week, investors withdrew $532 million. However, according to Russell Starr, CEO and executive chairman of DeFi Technologies, Bitcoin is more of an inflation hedge than a risk asset. Bitcoin is following the stock market. The world's leading cryptocurrency continues to be strongly associated with conventional markets, and according to Goldman Sachs, Bitcoin follows the stock market in lockstep. Prior to the pandemic, linkages between Bitcoin and other digital assets and conventional financial market factors were weak. In reality, crypto acted as a completely distinct ecology. However, as Bitcoin's popular usage has increased over the last 2 years, its association with macro assets has strengthened. There seems to be a tendency toward a closer relationship between cryptocurrencies and traditional financial assets, which may be the consequence of an influx of experienced traders into the digital finance sector. Contrary to its promise of becoming an irrevocable and decentralized buffer against the financial system, Bitcoin now replicates the volatility of existing markets. In the institutional financial system, a gradual increase in Fed interest rates has been well signaled on the bond market and is reflected in the prices of the vast majority of risk assets. Bitcoin has lately been recognized as a member of the same category. Nonetheless, its long-term value is also supported by its scarcity and its promise to provide a peer-to-peer payments network that is quick and inexpensive. When did people start investing in Bitcoin? From 2009 until 2017, prices started to grow as demand gradually increased. When its price surpassed $1,000, many individuals felt it would continue to rise and started purchasing Bitcoin for investment purposes. The market exploded once traders started utilizing Bitcoin exchanges for short-term transactions. There are hazards associated with investing in Bitcoin. Since 2016, cryptocurrency-related crime reports have surged by an average of 312% every year. Bitcoin is the cryptocurrency with the most reported crimes. Experts assert that Bitcoin investments are secure, at least from a cybersecurity standpoint. But according to the Federal Trade Commission, cryptocurrency-related crimes are increasing. Experts advocate limiting Bitcoin investments to less than 5% of your portfolio for the same reason you would with a traditional retirement plan. You should also avoid unsolicited crypto-related offers. Do your own research and purchase coins independently. Be wary of coins whose value has increased substantially for no apparent reason. This may indicate a pump-and-dump operation. Ensure that you trade and store your cryptocurrency on a site that provides comprehensive security. In the event of theft or hacking, certain exchanges may have private insurance coverage. Experts advise investing in lesser-known cryptocurrencies meant for complete anonymity. Is Bitcoin an attractive investment? Bitcoin's brief investing history is marked by price volatility. It depends on your financial profile, investment portfolio, risk tolerance, and investment objectives if it makes for a smart investment. Before investing in cryptocurrencies, you should always get the counsel of a financial expert to verify it is suitable for your circumstances. Cryptocurrencies have been touted as a transformational technology that have the potential to change a variety of sectors. Because cryptocurrencies cannot be produced or confiscated, they may potentially serve as a secure store of wealth. There is no assurance that they will ever be widely used. Therefore, investors need to adhere to complicated security standards before making a purchase. Due to its deflationary and censorship-resistant qualities, proponents refer to cryptocurrency as digital gold. This makes it appealing to those who fear hyperinflationary occurrences, bank collapses, and other crisis scenarios. Warren Buffett, Bill Gates, and Jamie Dimon, CEO of JP Morgan, are among those who have warned of a possible cryptocurrency bubble. Hackers have stolen billions of dollars worth of tokens from exchanges, wallet software, and individual users. Unlike other programs, the majority of digital wallets cannot be reset if the password is forgotten. Users have lost cryptocurrencies worth hundreds of millions of dollars owing to forgotten passwords or misplaced devices. Only invest money you can afford to lose. This is one reason why you should only invest money that you can afford to lose, particularly in high-risk investments. If you do not need the funds in the near future, it is simpler to endure even severe market volatility. Your long-term view on cryptocurrencies is crucial. If you feel that Bitcoin might be the digital currency of the future, or that blockchain technology could revolutionize whole sectors, cling to that line of thinking. Nobody is able to forecast the future. Nevertheless, if your reasoning holds true, it will be simpler to judge if the crypto price decline is likely to persist. How do you feel about investing in Bitcoin? Have you had any positive or negative experiences you would like to share? What else would you like us to talk about in our upcoming videos? Let us know in the comments below. And make sure to subscribe and turn on notifications so you don't miss out on any of our videos.